The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour, where we come to you at this time almost every day.
The following takes place between 2 p.m. and 3 p.m.
Yeah, he's got a new TV show, too. It's all about a lower cabinet member when everybody in the government gets nuked and he's the last one left. I kind of think that's a Christmas story, isn't it? Just would be, well, could we just start all over again? Anyway, what else do we have going on out here? S&P is up 13 points today. Interestingly, volume is tepid in the indexes, but vaporous in the underlying stocks, or at least many that I'm looking at here. As I said it before, I am somewhat bearish.
Smokey just gave me a bear hug.
Well, he gave me another hug today. So I had to say, you know what? Market's up on light volume. A little lighter than yesterday, but that's on the indexes. When you dig down and find out what the real volume is in the individual stocks, especially the ones that have been running, very, very light. In the equities, there's also something else going on we talked about a while ago. It was discussed in the den earlier today. We will revisit that. It's what they call in the business a tease. And what else we got going on? Well, got the Fed, got a lot of people getting ready to start talking over the next few days. Janet Yellen tomorrow is going to be doing a lot of blabbing. Remember, God, what was his name? Jonathan Winters had Aunt Blabby. I wonder how many people remember that. Aunt Blabby. That was kind of like, wasn't that pre-Flip Wilson? Geraldine? I think that was he was a few years earlier than Geraldine. He was big. Anyway, we're 2158, so no big deal out here on the S&P cash. Volume, like I said, just a tick over 2 billion shares on the New York Consolidated Tape. Anything else really happening out here? No. And, of course, if you are short or have been short before, you know it may be a trade that's many times harder to sit through than being long. The market's up most of the time, maybe 3/4 of the time. So if you want to be right a little bit, being long is generally fairly interesting. If you want to be wrong very quick also, and maybe 25% of the time long, over an average. I'm not going to say that it's on all stock, but over the average, you get, in fact, I read something many years ago, but it continues to be updated. And it was like if you had just gone through and gotten rid of the worst 10 days, the worst 10 days out of the market, and you were out of it when that happened, your results would have been 3 or 4 times over a 20-year trading record than being in it. And all you have to do is dodge a few bullets. And almost every one of those bullets, even 9/11 came when the markets were incredibly weak and fragile, like a tree eaten away from the inside by ants. When things are looking a little tired. And to me, the market's it's kind of nodding off. Kind of like, kind of like the guy that was he a general in North Korea about a month ago, and he nodded off during one of the speeches of the great leader. I think he assumed room temperature shortly after that. But kind of nodding off, even though you want to stay awake. Just not a lot of interest. A lot of interest in pushing the stock prices up. Very little in buying them once they've been pushed up, as we've said before. Pushing the market to the river, but the horse don't drink. Well, let's get this party started.
That it's all just a little bit of history repeating.
And what else do we have to go? Oh, yeah, somebody's talking in the den about Jonathan Winters. You know, Jonathan Winters, most people don't know it, but I had the pleasure of going out in L.A. There's a place called Ralph's. It's I think it was Ralph's grocery store. And I spent a lot of time out there, so I got to know my way around, and I'd be there for maybe a couple of weeks at a time, so it wasn't uncommon for me to get something like a suite where you could cook in and everything else. So I'd have stuff, so I'd go down to Ralph's and stuff. And occasionally, Jonathan Winters would be there doing his act in aisle 3 or somewhere around there. And I caught it a couple of times, which was kind of one of the cherries on the top of having to live in Los Angeles. Not much, on the beach, one thing, kind of being down there with Hollywood, it's kind of another one. Actually living and driving in it, much different experience. But it was very, very interesting to see Jonathan Winters in person on aisle 3, cleanup needed. But it was very funny. The same guy as the Charmin guy. And that's it. But, yeah. Anyway, volume coming in just a tad bit, 2159. Anyway, we've got our little bit of history. Did I play the history thing already? I don't know. Let's play it again.
That it's all just a little bit of history repeating.
Maybe I'm repeating the history repeating. Wouldn't that be ironic? On this day in 1820, a train carries passengers for the first time as George Stephenson's, a self-taught engineer in the coal mines of Newcastle, England, demonstrates his new steam-propelled locomotive on rails, the Rocket. The train hauls a huge cargo load from Brusselton to Stockton, a total of just under 21 miles, in 4 hours and 12 minutes at a blistering pace of 5 miles an hour. The crowd of onlookers and 600 passengers climbed aboard are outstanding. Outstanding. Anyway, very interesting. And, of course, a lot of people think, well, who invented the steam engine? And the answer is somebody way before the person you think invented the steam engine. They just made one that actually worked fairly well. A lot of people have good inventions and good ideas. I had a smartphone, or I played with a smartphone, probably in 1994 or 3. It was a Microsoft version of a smartphone. But just not enough memory and not enough battery and not enough other stuff. A lot of people think Microsoft missed a lot. A lot of times they were just very early. On this day in 1820, you could get on the choo-choo. I don't know why kids love trains, especially if you're under 6. They're somewhat fascinating. Them and dump trucks. We'll be back. We'll talk more about market-thon stuff in the coming minutes.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we'll come back. Let's see if there's anything else I wanted to talk about. I think there was one thing. What was it? Fed speaking tomorrow. We got 12 other speeches coming this week. But she'll be, I think, Monday morning and afternoon tomorrow. So you got to watch out for Mrs. Yellen. What else do we have out here after the bell tonight? Cintas and Nike, and before the bell tomorrow, paychecks. Again, not a lot going on out here in the market. Got a few things. Question in the den was about Microsoft. Where's my chart? Let's get that up and running. Question is, what is and who is running Microsoft MSFT? There are two people that are probably important in Microsoft right now. One is Satya Nadella. He's been around Microsoft 15 years or something. But he went really back to the drawing board of when Microsoft was successful. And that's what he continues to do today. And part of that success really, especially in from probably about 1990 to 2000, Microsoft had a policy of extend and overwhelm. There was actually another name for that. Maybe I should look it up here. I occasionally forget what the extend... extend Microsoft, and then envelop. Maybe that it. I'll think of it again. Anyway, they had something that was all over the documents in 2000 when they were getting barbecued for antitrust stuff, and it was something about extend. I'll find it during the break. Extend, adapt, and overwhelm or something like that. Basically, all you wanted to do is get in the middle of the business, muddy it up so it was tough for things to happen without you, and then basically make your own standard and leave everybody in the dust. I'll think about it. But anyway, Satya basically went back to what Microsoft did well in the 90s that was abandoned when the CFO in Ballmer became the CEO. There were a couple of reasons why Bill Gates left Microsoft. One is he didn't want to deal with the politics. All he wanted to do was kind of scope out the big, long stuff. And in, I think it was 1998 or 1999, why you won't find much about it. I was there to his house in 97. I want to say 97. They were building a television studio inside his house. And I went through this whole thing. It was probably worse than trying to get into a nuclear launch site to get in his house and help out some of these people who were putting some of our equipment in. But his kids, right after that, there was a plot with the housekeeper to ransom his kids off, kidnap and ransom his kids. And that was the first time. There's been at least one other and maybe even two other times that it happened. He decided that he just wanted to get out of the limelight, raise his kids. Part of that, I think, had to do with his wife, who was an employee at Microsoft at one time. Forget what she did. But anyway, put in Ballmer for the next 15 years. And Satya Nadella pretty much came along and stayed out of Ballmer's way, continued to always do things kind of the old Microsoft way as he could do them. But he's the CEO now, and it kind of, if you wanted to think about it, think about Microsoft of old. That's basically, he's just decided to run it just like Bill Gates did in the 90s, and why they've made such rapid improvement in just a couple of years. A lot of the elements were just laying there. But Ballmer was and always will be a bean counter, and you can't have somebody run a war or a business that's tepid, that is risk averse, and of course mostly just prone to making horrible decisions. He bought Skype for $8 billion. I'm talking about Ballmer, and we'll see what happens. Of course, Satya has bought LinkedIn. I think that's probably a good match. Microsoft really is trying to go after a couple of business sectors right now. One is they have their own version of a thing called Slack, which is kind of a replacement for email, so you don't get spam. But it's email for inside companies is probably the best way to look at it. The other gentleman that matters most at Microsoft is, I want to say, Panana. I've seen him a couple times. Actually, seen him live in a demonstration, another one. But he is the gentleman that has put all the Surface laptops together, and of course the tablets and laptops. He's had the first really successful hardware to go with software. You might think of him. He's probably, if there's going to be a next real Steve Jobs, it's probably, I want to say Panos. Maybe I'll look his name up again, too. He's working on coming out with a new phone to actually rival Apple's. But he's made the, what everybody says is the absolute best laptop in the world right now. He's made what everybody calls the best tablets in the world right now. And you'll see him advertised a great deal. Anyway, he's making a new Surface phone. It's not a big deal, but I don't think that's out till 2017. My guess, though, is if he does a very good job on that, he will probably come along as the next Steve Jobs. That is, someone that is very good at putting together hardware and software in a very nice, what would you call it? Like an orchestra. Putting everything together so it sounds well. And I think that has been, for all the other people in Microsoft, could they come and go? Would it matter that much? I don't think so. I think you have to have somebody like Satya Nadella, who has figured out what worked in the past, and you have to have somebody that's very good in hardware and software, kind of a Steve Jobs figure. And probably the only difference between Steve Jobs and this guy is Steve Jobs was all ego. This guy is kind of a real engineer, but likes the part of it. I'll look up his name during the break. But that's pretty much it on Microsoft. It is two people that are probably the most important. A lot of other people could come and go, but the hardware guy that's back there putting the notebooks together, coming up with the theories on how everything should work universally, coming out with their new phone that they think will finally compete with Apple. The reason they think it's going to compete, someone IM'd me here, because they think that processor power, battery power, and memory are now getting big enough that you won't have to have limited apps on your phone, that your phone will be and work as well as a PC in your hand. We'll be back. We'll start looking at some more charts after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we were talking about Microsoft at the bell. Just very interesting, especially if you're more of an investor than just trading out every day. What is that? Come on. Get it back here. There we go. But if you're an investor, it was the strategy that Microsoft used pretty much from about 1985 to 2000 and it was called Embrace, Extend, and Extinguish. It was all about finding some kind of standard, like a web standard. Embrace it. Tell everybody you're going to be open source and play well with everybody. Extend it. Add a few additional features that no one else have. And then, of course, do everything you can to drive everybody out of business that doesn't have the same feature set that you have. And that's most of the documents that were in the antitrust had to do with them doing this to Mozilla Firefox. At the time, it was Netscape. But I think they're pretty much going back to that. It worked extremely well. I think they'll figure out new ways, probably to not put this in emails, but still use it quite effectively. Yeah, you don't want to put those things in email. Not at all. Anyway, when you see what a company is doing out here, do not be surprised to see so many people embracing what worked extremely well in the 90s. And everybody knows about it because all those emails became public. So a lot of people figured out how to do what Mr. Gates did, too. Let's see. We're going to look at some charts and stuff. Another stock out here today, GPRO, was down a little bit. Again, volume... I'm going to just call it wimpy. 2.2 billion shares so far at the bottom of the hour. That's not going to do a whole lot for me. A little bit of a reversal on GoPro. A little bit of sell the news. I think you can probably put a little bit in that one. But seeing a lot of these stocks that had some runs that look like some short squeezes, a lot of discussions about buyouts lately, like Twitter and some of these other ones. You know, in 2000, 2001, early 2001, in 2007 and 2008, it seems like everybody kind of knows that the end is nigh, and they're more than willing to, take the cash and run. The Skype guys walked away with $8 billion. I always wondered why anybody would pay $8 billion for Skype when you could probably build the same thing for maybe 500 million or 750 million and compete against them. A lot, is just getting rid of your competitors so you can raise prices. But for the most part, they work so infrequently. Buyouts do. In technology, don't paint with too broad of a brush. A lot of discussion about whether GoPro would be bought out. I don't see it. They've got a lot of debt, a lot of shares of stock. We talked about it last week with their new launch of their product. This may just be a little bit, but probably want to watch the next few days. Would I be surprised if this thing came back down to 1150? I would not be. As we said, they may be the best drone manufacturer. The question is just how many people need drones? And it's the same thing. How many people are going to make or try to make Gone with the Wind in their basement? It may sound like a great idea. But again, I heard that speech this week, and as I tell many investors or even people trading, when you hear the spineless and the weaselly analysts, I got to sneeze here. When you see the skunks of Wall Street, otherwise known as the analysts, start talking about something called total addressable market, you generally want to run. I don't know if I've actually ever heard it in connotation with a stock that later did well. It's almost always overselling the stock by saying, you know what? There's 7.3 billion people on this planet, and every one of them has a mouth. Therefore, I should be able to sell every one of them toothpaste and a toothbrush. Well, it sounds good in theory and practice. Maybe you can't go to every country. Maybe there's people that can't even afford one. Maybe there are issues, legal issues, you can't get there. The total addressable market is always the giant lie. When you hear that, especially if you hear an analyst waxing philosophically just how monstrous a market can be, like the drone market. Well, everybody's going to have a drone. Well, probably the answer is not everybody's going to have a drone. And not everybody wants to fly a drone. Maybe they fly one and then it's on Craigslist 2 weeks later when they've decided that flying it around down there is just not that exciting. But just a thought. Anyway, GoPro back today. Trying to think if there was some other stocks out there that was very interesting. I want to say Smuckers. SJM was on my list this morning. SJM as another mover. Again, this one is back into this gap up. A few stocks out here that don't look all that bad. I just like the way it did come down on the 23rd of August with some volume, 5.3 million shares. That just told you this thing broke with volume. It was at least coming back to where this thing actually gapped back up, which is on the, what is that, June 9th. It gapped up on 3.7 million shares. You dislike that it got, with this candle, came back down with 5.4 million shares. But volume has kind of been light since then, and you've gone back and filled this gap. That is where things probably get about as tough as you can. I don't think I have enough time to finish it up, but we talked a great deal about confluence levels and how to use them. And I don't know if this one still shows up now in this retracements. I don't think it does it? Maybe I need to go a longer time frame. Yep, it still shows. So we'll talk about the TLT when we come back. But my thoughts on this was there probably wasn't a better play that I've seen in many years in the TLT than this setup with Confluence. We'll talk about how this has played out since we started talking about it back here on September 15th. But what is it doing now? Where and how is this little doji going to affect what's going on in the TLT and the rest of the market? Well, inquiring minds need to know. I'm just trying to get out of this segment, and then we can come back so I can have many minutes to talk about what's going on. In the meantime, as we check into the market, 21.59 on the S&P cash. Volume has been very tepid for the last 3 hours, just 2.2 billion shares. We'll get back, look at a few more stocks, talk about the TLT, and then we'll get into the GL or the GDX for one of our happy emailers. You can email me at path@tfnn.com. Call me at 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we were talking about confluence levels a couple of weeks ago, or at least on the 15th. Yes, I guess that's a couple of weeks ago, almost already. We were saying that if you wanted to make a play in the TLT, there was no better place to do it. You had confluence, you had a gap that needed to get filled. You had a lot of different things. We're kind of following up on that discussion from, 10 days ago, probably 10 trading days ago. But you are getting into where all the easy money is over. You had a few things that I really loved in this, and you can see them with my Power Law Vector Indicator number. We'll start back into this in the chart school here section of the Power Trading Hour. November 9th, we saw the low at 118, and that's 2015. Went up to February 11th, pulled back and to April 26th. Now, if you can see, you may not be able to see it well. You may be able to. 4.9 on the first leg up, and then 3 back on the leg back. 5.2 when we start looking at the next leg that started on April 26th up to the July 8th level, and then 3 on the pullback. So this one was pretty nice. You had a lot of energy on the way up. The energy did pull back. You went to some level that you could see on multiple levels, both the confluence level and the gap. You could have made the trade on either one. That both of them were there was dynamite. This got to 133.03. The bottom of that range was 133.42. So I don't know, 30 cents away. I'm going to say that that's a winner. But much like when Tom talks about Gartley patterns and his Tiger Gartley, you want to see not just the volumes at lows, but of course the character of the volume as it came back in. I don't bring these up a great deal. This one was just so spectacularly good looking like this, and it still is coming up here. What you have today, though, the reason I bring this back up is it is a make or break time for the TLT. We've come back into this gap down that had a lot of volume. That was on the 8th of September. Is that right? 8th of September. This thing started gapping down. Did so with 14.3 million shares. Now, what are we doing today? About 5.4 million shares. And you have a doji. So there's generally a 50-50 chance that the doji sets up the top of the move or the halfway part of the move. So tomorrow, what you want to be looking at in the TLT is if there's any more extension. If there's anything in the way of volume that comes in, then you can probably start speculating that you are in the next ABC up in the TLT. I'm not a big proponent of that, but we can certainly take a quick look at it and see how that would actually come back in out here. And if we make this the A, which is the April 26th low, we make the B point out here. What is that? The B point, what is that? July 8th. And we take that low that we talked about out here in the low. Down here. I messed it up. Hang on real quick. Okay. That's the A. That's the B. And that is the C. There we go. Ah. What am I doing wrong out here? Something doesn't like me. Start over here. Expansions. Let's go to 1 year. Maybe this thing will love me a little bit more. Okay. Okay. Do we have anything in there? We want the 127, 143. Yeah, always doing it automatically instead of me doing it by hand. Almost always better. Anyway, we've got that up, and of course, that would be the September 15th point would be the C point. That would set up a 1-to-1 at 149.53. So we are at a point right now where we're going to find out where maybe this thing, does it get to the gap up there at 140? It could. But what we need right now is volume. You had some fairly decent volume on this move up, so I'm not going to say that it's horrible. It's just not what it was on the way down, and that's why I'm probably thinking that you may be setting up a trading range between this 133.03, the September 15th low, and the high today out here. If this doji does stand, you are going into high volume down days, 13.3 million shares on the 9th, and again, 5.5 million shares today. So what are we, at 1/3 the volume right now? That is not a good sign, but doesn't mean that it's going to break the 133 next time that it goes down there. But I suspect that we are setting up for that lower trading range. Eventually, you're probably going to come back down and fill these two gaps at 121 and 124.5. You also have a gap at 128. So there are a few gaps out here that could get filled in the TLT. But, maybe we get volume tomorrow and it really starts picking back up and I'm all wrong on this. But and the volume's been okay, but not great off that low. But putting those two things together right now, looking back at where support was at the 133 level, where you had 15 million shares instead of the 17 million shares, you really kind of get an idea out here that it was about 2 million shares light for the gap up. You can kind of see where, it wasn't like it tested it on 7 million shares. It tested it about 2 million shares light. I've thought that after this bounce went for a little while, that it was much more likely that we're in some kind of trading range. Maybe today, maybe tomorrow, maybe we get up to 39 and some change tomorrow, and then this thing starts rolling back down. You're probably looking at a trading range, at least for a while, between the 139 area and the 133 area. Let's talk about some other charts. Did I get to? Oh, had a question in there. What would be a good entry for GDX? I'm going to say probably I would not play it. We will take a quick look here, though. I don't see anything right now. I would, again, you've got a double gap right at $23.50, $23.60. How many have we pointed out over the last 2 weeks of these double gaps where you had a small gap, then you had a bigger gap that went right through that gap, and then almost all these stocks are at least coming back into that gap, those double gaps, and at least starting to fill those double gaps. It just looks to me like that would be the only safe place where I would put money at risk. 2350, 2375 would be kind of the first spot. Do you get it? I don't know. But I would have to wait for that to be on the conservative side of playing the market vectors gold. And gold is pretty good about washing people out. I would not be surprised to see a nice little washout to the downside. And that's where you would want to be looking, why everybody else is running.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're up on 2.3 billion shares on the consolidated tape. And you know what that means? It means that we have to go to the Glad Bag Company for their commentary on the volume today. Yes, it was wimpy. It is wimpy. 2.3 billion shares? Ha! Not on my watch, sir. Not on my watch. Anyway, we'll look at a few more stocks out here, some of the ones that I had in the newsletter this morning, see how they're doing and get a chance to actually catch up. I was watching First Majestic Silver, another good reason out here to say, you know, this one fully, completely filled the gap from June 3rd from First Majestic. I don't know enough about these companies, nor do I follow them. But you know, you're probably finding at least some level where some of these companies are starting to base back out. but I don't see a great deal of these showing up in any of my scans yet. I don't know if there's something particular about this. Maybe if Tom O'Brien is listening in his warm-up position out there in the bullpen, maybe he'll cover that on his show. But I do kind of like that. You had your first low back here on September 1st with 18 million shares. Yesterday you had 5 million shares. Today you got about the same amount. Would have liked to seen the volume kind of dry up out here right now. You had a nice big volume day where the market didn't go anywhere at all, which I always wonder about it. 27 million shares on the 16th. I wonder what that's all about. So there's a few things out here that wouldn't make me bite on some of these, but a very interesting one. If we look back a little bit farther, the next level down, if this fails, would be at about $8.50. There is a nice little gap that has acted as support. It gapped up on April 19th, 2016, and that was on about 8 million shares. So could you get this thing to kind of extend? You could. Is it possible this is an ABC? I would have liked a little bit more retracement to that September 8th high. So they're kind of in no man's land for a great deal of these trades. Again, I'm being and would be incredibly patient with gold. And I don't think I'd be biting on First Majestic here just on a chart basis. But that 850 level may be the next level where this is coming back. We've got one more minute here in the show. Let's take a look at MasterCard. Been watching this thing play around at the highs. Energy off this July 6th low up to the September 22nd high out here. Energy is no better than the energy that it was down. But you really want to look at that November 11th high in 2015 down to the, for the most part, the February 9th low. There was a great deal more energy. We really have never repeated that kind of energy on the move back up. At best, again, it looks to me like there's a trading range setting up in a lot of these stocks. And again, it is these double gaps that are out here in these stocks that I suspect are going to be the support levels and where you'd want to see these things come back to buy them. In this case, MasterCard gapped down on the 24th of June on 8.3 million shares. It gapped back above it with just 5 million shares. And again, that's why I suspect that a lot of these gaps and double gaps that were out there, and there are a ton of them now, will get retested. So look back to about 94 and change in MasterCard. In the meantime, sell when you can, not when you have to. I don't like the volume. Did I say that? We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.